Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Kellton Tech Solutions Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would like to thank you all for participating in the company's earnings call for the third quarter of the financial year 2022. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's conference call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintam, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Mr. Srinivas Potluri, Chief Executive Officer, US. I now hand the conference over to Mr. Niranjan Chintam. Thank you, and over to you, sir.
Thank you, Margaret. Good evening or good morning, wherever you are. Want to welcome all of you for our Q3 earnings results and call. Just want to give you a few highlights of the quarter on the numbers first, and then we'll talk about the qualitative part of our Q3 performance. First, the financial results. We have achieved close to 219 or 220 crores of revenue this quarter. This is in comparison to last quarter of 5.2% growth and comparison to a year-on-year growth of 11.1%. EBITDA, while there is a slight dip in EBITDA, this is primarily due to aggressive hiring that we've been doing, building up our employee base for the next level of growth. As you have heard, the previous quarters, we have added clients, and in order to support those clients, we had to staff up, and that's the reason why there's a slight dip in EBITDA numbers. EBITDA, while there was a slight dip, the profitability when it comes to the PAT, there was an increase of 2.1% on quarter-on-quarter growth. So the margins, as because of the aggressive hiring, the EBITDA numbers are again a slightly dip. Whereas when it comes to the EPS, almost the same as last quarter. The number of customers that we have acquired, the new customers and new logos this quarter is around 6. I will let Srini and Karanjit give you some little bit qualitative ones as we go on with the qualitative part of it once I'm done with the numbers. On the EPS, for the 9 months, we are at 5.29, which is slightly higher than the previous year 9 months. Revenue also is about 633 crores compared to 571 crores for the previous year's 9 months. The EBITDA numbers and the PAT numbers, are almost in line with what it was for the previous 9 months or last year's 9 months. And that will continue to be, looked at, and we are expecting that to the end of the year, numbers will be much better than what it is for this quarter. Also, I have made some statements related to we are restructuring the organization, and we have completed the restructure of the organization, and starting January 1, we are going with what we call a mission of One Kellton. I will ask Karanjit to briefly talk about what this One Kellton is meant for in a few minutes. But primarily, the reason for the restructuring was, we hired an external consultant to look at our structure, our strategy in detail, he has done almost a 9-month analysis of how we are structured, interacting with both our customers as well as our employees, and has proposed certain changes. And he has made an observation that because of structural limitations, we are limited in the growth. And that's the reason why, we restructured the organization. And from January 1, like I said earlier, we are working as one Kellton. Karanjit, can you please briefly talk about what the one Kellton is and what it means to us?
Yes, thank you, Niranjan, and hello, everybody. As Niranjan said, we have a growth advisor who advised us, and we've been in discussions for a few months now. And we've been planning the change to how better organize ourselves over the last 6 months. It has been through thorough discussions. And the idea was to bring better alignment and bring all the capabilities that exist within Kellton and amplify it in our go-to-market strategy as well as value to our customers. This change became effective beginning of this year on 1st January. And it has been very well received internally by all our employees. Everybody now understands it very well, is aligned with the change that we are going through. And in fact, a lot of employees are very excited about the new possibilities. We have also, since January, we have been operating in the new mode and have gone to our customers and have been able to talk about it. And our customers also see the benefits of this and how they can derive more value. Because one of the big things about one Kellton is to take all the pockets of excellence and better align ourselves and take this whole capabilities to the market and for our customers to derive that value. And this has been very well received. And we've had, it also means there's a different thought process, a different way of operating and engaging, both internally and externally. And also employees are also very happy about the fact that this also gives them, within one Kellton, more opportunities, global opportunities and a view across the organization. Yeah, that's all I had to. Niranjan, that's kind of a brief on one Kellton.
Thank you. Should we open the floor for Q&A session? Members of the management, please confirm if we should open the floor for Q&A session.
1 second. Margaret, yeah, hold on for 2 more minutes. Sure. Thank you, Karanjit. Sure. We will be happy to answer any questions related to one Kellton as we go on with the calls and the questions and answer session. But before that, I wanted Srini to talk us through of the new logos and new customers that we acquired in the last 1 quarter.
Yeah.
Srini, go ahead.
All right. Yeah. Thanks, Niranjan. So from a perspective of Q3 FY22, we have had some major wins, and I will generally brief about 6 of those wins. I'm happy to say that 3 of them are in the fintech area. 1 is in healthcare. One is one of the largest equipment rental companies in the world, and the last one is a emerging technology company. From a perspective of fintech, we have been selected as a preferred technology partner by one of the leading fintech companies in the US. And what we are doing for them is we are enabling advanced digital identity verification in line with the Web3 framework or the Web3 ethos. This is really cutting edge at this point. Under this collaboration, we will be helping our client to upscale their data bridging capabilities across the Web2 and Web3 layers. Right? And we actually, in this project, are going to leverage the blockchain technology to help our client optimize their dynamic know your customer or the KYC process. So that is really exciting. Another one of the fintech companies that we are working with is in the GCC region, and we are collaborating with them to build an innovative digital gold hedging and storage platform, leveraging gold as a non-fungible token or an NFT. These ERC-20 compliant tokens will enable the client's users to buy and redeem digital gold for hedging and investment purposes. The third fintech company is interestingly in the education lending space, and they have partnered with us to digitalize their end-to-end customer journey. We are basically helping them to achieve an agile customer experience transformation across all of their users' touchpoints through a mission-critical mobile application. What this app will do will enable students to evaluate different financing options. Okay. Then from a perspective of another emerging tech company, we have been chosen as a strategic technology enabler, right, in trying to disrupt the next generation QR technology. And this is basically so that their customers can achieve a holistic experience. And we are focusing on redefining the entire user experience by building an intuitive platform to create custom dynamic QR codes with advanced embedded real-time analytics. Then we spoke about three of the fintech companies and the high-tech or the emerging tech company. One interesting, going back to an enterprise, which is the largest equipment rental company in the U.S., globally actually it is one of the largest equipment rental company, has selected us, Kellton Tech, to modernize its core critical IT applications and infrastructure. Under this particular opportunity/engagement, we are helping our clients to define and execute a transformation roadmap for their current technology ecosystem by making it future-ready, secure, resilient, and scalable. The healthcare company that I alluded, for one of the leading companies in the U.S., we have been building an intelligent BI platform, the business intelligence platform, by integrating disparate data sources to enable single window tracking of workforce performance and analytics, creating a dashboard of sorts for us. And this is a global workforce management company in the healthcare space. That's all I have. Niranjan, those are 6 of the major wins that we have had in the last quarter.
Okay. Thank you, Srini. In addition to this, last quarter we have launched Humble, which is an NFT marketplace. I think there was a press release that was sent out. Just to add to what Srini was talking about, NFT is an interesting area. There's a lot of investment, a lot of interest going on in that NFT space. And we have successfully launched multiple different projects, our platform solutions for our customers in the NFT space. As you all know, NFT space underlying technology is blockchain. Hence, that's an exciting space that we have expertise in, and we are working with our customers to launch solutions for them. With that, Margaret, can we open up the call for questions?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil, an individual investor. Please go ahead.
Yeah, my question is to the directors. I have been listening very patiently. Thanks for giving me an opportunity.
Sorry to interrupt you, Nikhil. Your voice is not very clear. I would request you to come on the handset mode and speak, please.
Is it okay now? I think it's
yes,
okay.
this is better. Thank you.
Yeah. So I have been listening to your presentation. Thanks a lot for giving me an opportunity. My question is, what percentage of your business covers for B2B and how much percentage it covers for B2C? Because the add-on customers that you have quoted, this is more on value-added solutions from the client. If I can know something for the B2B.
Okay, so the question is a little bit difficult to answer, Nikhil. Here's why I say that, right? When we build solutions to our customers, it could be internal customers or it could be external customers, right? Primarily, our e-commerce kind of thing or fintech kind of a thing that we provide platforms and solutions to our customers are B2C. But with that said, right, there's a lot of enterprise-related customers where it becomes B2B. I don't have a breakdown as such, but ultimately what I would say is that, the customers are either could be internal or external. Maybe, Karanjit, do you have any idea to talk about a breakup on the percentage basis? What would be a B2B kind of a solution that, we're building for customers?
Okay, thanks a lot. Now, I was just wondering, let's say you are focusing on the education line, wherein a set of clients the one you mentioned, that is students, the clientele of students approaching you, that's more of a consumer-driven business. Now, I was referring, if I'm not mistaken, there is some pharmaceutical company from US which had given an order to you. So in that case, B2B means segmenting the business into pharmaceutical or maybe power industry or maybe engineering industry and tapping from the marketing team of yours to this set of customers. That's B2B I meant, basically. Segmenting and then focusing on these customers.
Okay, so you're asking from an industry vertical. Nikhil, if I'm right, then you're asking from an industry vertical point of view.
Yeah, that's right. That's right.
Okay, we are industry agnostic. Right? With that said, there's a lot of these high-tech companies. Now, what Karanjit just talked about, the fintech, the healthcare. In these kinds of situations, there's a blur. The line is blurred. What exactly is high-tech versus what exactly is, what exactly is consumer-facing, what exactly is internal-facing. It's always a blurred line, right? End of the day, there are customers. Yes, when it comes to fintech industry, it is a B2C because the customers are coming online trying to do something. Like the healthcare, there's a B2C. In a pharma-related company, we may be restructuring the way they do their business internally, but that there's an ultimate effect on the customers too, right? So that's why I said, Karanjit, do we have an internal breakup of what exactly is a consumer-facing versus what is internal-facing?
No, unfortunately, no. We don't really look at it or split it. No, we don't split it that way or look at it that way.
Okay, got it. So, Nikhil, let me get back to you on that. We'll be happy to reach out to you separately and get you a breakup of that. Today, we don't have it off our head, but would be glad to go back and check and come back.
Thanks a lot for your answers. Thank you so much. Yeah.
Thank you. The next question is from the line of Meet Gada, a retail investor. Please go ahead.
Hi. Good afternoon, everybody. Am I audible?
Yes, you are. Go ahead.
Okay. So thanks for the great presentation on the One Kellton. Really excited to know that it is already in effect. So the first question goes here. You said that the main objective, I think one of the main objectives behind the One Kellton program was to see some operations getting streamlined and also to have some significant rise in the margins going forward. However, this is not a forward-looking question. After the integration, it would be great if you can tell us as to what has been the growth in the EBITDA, because that has been a line of concern on the balance sheet. If you see, there's not much growth observed except for a little bit maybe. So since there's already been a month of it being in use, maybe you can throw some light if you can on the One Kellton and margins or the EBITDA increase observed after that. That is one. Another question, or should I ask the question after you answer this?
No, please go ahead with both the questions. Go ahead.
Yeah, okay. So another question is, in the last meet, I think it was being highlighted that you were trying to convince some companies in the US to get some work done in India in order to increase the margins. And again, this was being done in order to increase some revenues and also to garner some more customers with the increase of the margins and lower cost. Any update on the same? And also there was a consultant, if I'm not wrong, which was hired to help you guys in advising. Any inputs that you would like to share that was given by the consultant, if you can?
Sure. So I think that's something, thank you for your questions. Let me start with the consultant. So like Karanjit has already stated, we have hired a growth advisor. He's the one who proposed this restructuring of the organization. So the way that is the one Kellton is what Karanjit and I talked about. So we have implemented that. He's also advising us, as to how to approach the customer, how to go about this to get more from each customer. That is, get more revenue from each of the customers. So there is a strategy around that. We have just started to implement it. So you have to give us at least a quarter to see what is working, what is not working, and then come back and say, okay, I can give you some margin projections or EBITDA projections. But our internal goal is, from going from the low teens today that we are in to the high teens, probably in the next, not this quarter, because this quarter is just, we are implementing this. There may not be significant change for this quarter, but starting from next quarter is when we believe that the margins and per customer revenue is going to increase. So first quarter is implementation will be probably a little better than where we are today, but next quarter is when we start seeing all this, all the implementations, leveraging all the different things that we are doing today to get more. But with that said, right, so we are hiring aggressively. I want to make sure that, that also is a factor into this, when we come to the margins. We have plans to hire about 500 people over the next 1 year. And as I stated earlier, when we hire people, it takes close to 5 to 6 months before we start seeing revenue coming from that particular individual. So that takes some gestation time too. So when we are on this growth trajectory, the margins are going to increase, but not as much as what we want to. But our target is to get to the high teens when it comes to the EBITDA numbers and get to 10 to 11% when it comes to the bottom line numbers. So those would be the targets that we are trying to achieve in the near term. And then the long term, we will come back to you probably in a couple of quarters based on how our implementation of One Kellton goes, and then we can tell you, hey, what would be the long-term strategy of the EBITDA and the bottom line. But the near-term goal, again, I'm repeating, is to be in the high teens when it comes to the EBITDA and get to the 10 to 11% bottom line numbers.
All right. So also in the debt, the company, as you had already said before, was constantly trying to reduce the debt every year. But this quarter, there's a sudden increase in the financing cost, 17%. Would you like to, throw some light on that? And the other expenses, does that have the consultant cost included in it, or is it something else?
Okay. So the debt is almost in line with what we had last quarter. It's not like it has gone up significantly. So just to give you an idea, right, just the total debt is around 95. The cost of finance has probably gone up because the working capital is a fluctuation, in that particular quarter on what is happening. But, there is also what happens is, there are renewals that happen every quarter because we have limits that are set, yearly all over the world, right? Different quarters, different renewals happen to our existing lines. And typically those costs come in that quarter. That's the reason why there was a slight increase. And also there's a foreign exchange conversion also, right? So when there is a dip in rupee, the amount might look significant, but they're almost flat is what I would say when it comes to the total debt part of it. So we want to reduce the debt, but as we stated earlier too, right? So far we have not taken any money into the company. All of it is either self-financing, that being the promoters putting in money, or it has been through debt. So we have to grow, and for that reason there is a requirement for working capital. There is a requirement, as I said earlier, also that by the time an individual that we hire starts to produce revenue, it's like 5 to 6 months away. So we'll have to incur that cost, so that there's a cost to pay his salary, his overhead, all that stuff. Hence, slightly increased working capital limits is required. And as we are growing, there may be an increase in working capital, but we are watchful, right? So if you look at it, when we are in March 31st of 2021 to now, there is a dip, but it's not significant. Ideally, we would like to bring it down, but that's the part of our business where there is a working capital cycle that happens, and we require debt to finance that.
All right. And one last question. Thanks for those answers. The non-US business and the revenues, could you throw some light on the growth numbers for the same, the non-US?
So the non-US, Europe was a focus target for us, focus area of geography, but unfortunately last quarter, because of that Omicron third wave, right, there was a lot of shutdowns, and whatever we anticipated that it's going to take off has not done. And even today, some parts of Europe are still in a lockdown mode, whereas UK has opened up. We are hoping that this quarter is when everything gets opened up. I think the third wave of Omicron is going to pass, and hopefully we get back to normal. If we get back to normal, and then we start seeing regional growth coming from Europe, while Asia Pacific is increasing rapidly, US is growing. The new customers that Srini talked about are all US-based customers today. The big wins. We do have wins coming in from India, and East Asia is another focus target. We because of lockdowns, we can't even travel. While we are able to sell certain things through remote, but customers like touch and feel, and our employees have started to travel, not internationally yet, but domestically they're traveling, and we're able to get a lot more. We will be able to get a lot more customers and revenue coming out from these regions. But today, the major portion of our revenue comes from US, like you rightly pointed out.
All right. Thank you so much. It would be great if you can, give some projection of the Asia region, because the NFT businesses for, I think, majority of the companies are witnessing some exponential growth from the Asia sector. So any specific huge exponential growth that we expect from the Asian region?
So Asian, let me ask Karanjit to answer that. But our experience that we have gained in the US is going to help us grow in the rest of the region. Karanjit, are we seeing any traction when it comes to NFT in the Asia Pacific?
Yes, we actually are. In fact, we've been invited to participate in an RFP, in a recent RFP. But then again, see, our focus has been mostly on the US, purely from we are able to engage better, and also the realizations are better.
So what Karanjit is saying is that the margins are much better when it comes to US versus Asia Pacific. So we would like to focus on the high margin side of the geography versus the low margin side.
All right, sir. Thank you so much. Lovely speaking to you. And just one last thing. Any update on the operations being shifted to India, and what percentage, if would that be?
Okay, so the operations are in India, right? Majority of our employee base is in India. We have now over 1,000 plus now in India. And the hiring that I talked about, just to give you a ratio, right? It's going to be 400 people in India versus 100 people in the rest of the world.
Wow.
So that is a way of us to move some of these, on-site deliverables now to off-site deliverables. We are working with our customers, and I think, like I said earlier, there was resistance, but now there's acceptance because I think COVID has opened up every of our customers, to say that, hey, these guys can produce quality deliverables out of India. And we have made significant investments in coming to hiring also in India, going with a little bit of high-end kind of deliverable employees. We have hired head of HR from major organizations are coming and helping us as a part of this journey that I talked to earlier to break that structural limitation, to give us that global delivery. While we had global delivery, a higher capable global delivery team. And that is something that there's a huge focus on that. That's the reason why probably some of these margin pressures that we have seen is primarily due to all these hires that we've been doing. And they are expensive resources, as you are aware, bringing people on board to deliver this high quality deliverables that we want to do to our customers.
All right. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Kapil Das from GEIIPL. Please go ahead.
Thank you for the opportunity.
Yes, please go ahead.
Thanks for the opportunity. Just one clarification before I start. Actually, I don't represent a company. I'm an individual investor. And I've been following Kellton Tech Management's commentary since almost more than a year. It's really heartening to see a lot of progress being made in terms of One Kellton and some of the other wins that the management team actually graciously discussed beginning of the call. Before I jump into more qualitative aspects of it, I just have a couple of very high-level bookkeeping questions. I think one of this was also asked by one of the previous participants about the other expenses increasing by about 17% in the last quarter. And also there is a bucket called unallocable expenses of about 42 crores, which is approximately 20% of the revenue. Can you please throw some light on these two numbers before we jump into the more qualitative question?
Sure, absolutely. So I guess I probably missed that question. I did not missed answering the question rather. So yes, there is a growth in other expenses. This is a combination of the consultants that we have hired to help us with the restructuring. Two, subcontracting. Since hiring has become a challenge world over, right? We have, I guess, where the deliverables have to be met, the target the deadlines have to be met. We have hired some external subcontractor consultants to help us do the delivery. Hence, that has gone up. Just to give you a perspective, and just in December, we hired about 80 people. So this hiring process will take time. So while we are planning for this year, sometimes the hiring may not meet the requirements, day-to-day requirements, and then we get some external subcontractor to help us with the delivery. Hence, you see the jump in the numbers. Now, I think you asked one other question. I missed that question. Can you ask the second question?
Yeah, sure. There is actually
common expenses. I'm sorry. Yeah, you told me about unallocable expenses. So we are trying to do segmental, right? When we do segmental kind of revenues, segmental kind of expenses, sometimes we have what we call the shared services people, and those are not easily broken into, hey, this is for digital, this is for enterprise, or this is for the professional services big of the thing. That is what we call by unallocable expenses. There are corporate expenses. How do you allocate that? Yeah, we can go and say, okay, by revenue we can allocate, but that's really not the way it is supposed to be. We are getting better at our reporting, but this is purely to do with anything that is a shared services which we are not able to allocate. We are just putting in that bucket while we are refining that as we go on, and our auditor is helping us with some of these breakable. We again have got some external consultant to help us with better reporting, better breakup. So there is a lot of stuff going around that behind the scenes that you may not see that might reflect in some of our balance sheet items, but we are making progress towards being able to allocate to the granular level of these expenses and leverage from the consultants, external consultants who have been there, done it, to help us do better reporting.
Great, sir. Great.
I hope that answered your question.
Yes. Thanks for that. Really fair enough. One more question, sir. I see that the standalone results, when we look at it, the numbers are almost, 1/6, 1/7 of the overall consolidated results. So, do I read it right that the standalone entity, that is the earlier Kellton Tech, actually when compared to the subsidiaries overall, is it really that size in terms of revenue and other allocations? Generally, actually, what we see is even if, sorry, please go ahead. Yeah.
Good. Please go ahead. Yeah.
No, basically.
So let me answer that, and then you can ask your follow-on questions, right?
Absolutely.
See, not the standalone. I guess probably the way you're reading the standalone is probably a little bit misleading, is what I would say. Here's why I say that, right? When we do billing to our customers, anything that we bill from India is called the standalone revenue. Anything that is built in our entity subsidiaries in the US, Europe, or Asia Pacific, wherever that is, customers prefer to bill from the local companies versus billing from India. So that's the reason why the huge skewness comes in. The delivery may be happening from India, but the revenue is coming through the subsidiary to India. So it becomes a transfer pricing kind of a scheme. So in that scenario, what happens is, we book the revenue in US, Europe, Asia Pacific versus in India. So standalone is nothing but a parent company where we have some revenue that is India-based business that goes there. But Concall is what you should look at. It's not because of I think the traditional let's say the large IT companies where they have branch offices. We have structured it slightly differently, where we have entities in US, Europe, and Asia Pacific that are doing both delivery as well as being the customer build companies. And in many cases, what is happening is because of the size of the company, right? They prefer the local billing versus billing from India, because they can reach out and touch us if something goes wrong, or legal reasons. They prefer being in the local company versus being company in India.
Got it. Fair point. Thanks a lot for that. Now, just coming to some of the qualitative aspects, sir. So you mentioned about the One Kellton initiative being implemented positively. Can you share just a few examples? I mean, I understand the commentary, but in terms of, let's say, talking about a few examples, if you can share how it really impacts on the ground, the growth momentum, let's say the top line and the bottom line, what really changes prior to 1st of Jan versus now, that will enable us to, attract more customers and get more growth and bottom line.
I'll let Karanjit answer that, and I'll add more commentary after Karanjit finishes. Karanjit, can you take that, Karanjit?
Yes. So, as I said, it helps us, or it kind of aligns us better. We take all the capabilities of Kellton and take them together in our go-to-market, and have been having much more involved discussions with our customers, where we are talking about larger, being a higher or a more strategic partner with them, delivering a lot more value, which could be, I may be working on a certain area within digital or also enterprise, having more holistic conversations where we can actually get a larger share of the wallet, as well as increasing the deal sizes, becoming strategic. That is one major change for One Kellton from a go-to-market perspective. And the other thing is also, as within One Kellton, though we have always been global delivery, but now it is much more seamless with shared teams, where we cross-leverage a lot of capabilities, both from a technical capability perspective, what we call practice, as well as on the delivery side. So these are the two things that sort of really bring value to the customer and helps us elevate our work with them, and have larger deal sizes or engagements with them.
Got it, sir. Got it.
So let me add a little bit more to that, right? Sure. Just to give you, earlier we were broken down by business units based on expertise. Just discussion sake, right? Let's say a customer X where we were doing pure play SAP kind of stuff. That is all we were doing earlier. So that the salesperson is aware of only that, he's only selling that, he's gold only to that. Whereas today he's gold to, hey, taking that customer X and saying the customer X has this kind of IT budget. Now, why can't we get a larger piece of that? Okay, so he is not gold he's gold while on the revenue number, but he has to do other stuff too. So that means that he has to sell digital, he has to sell professional services where required. While we try to desist from professional services, those are the things that are changing. And like Karanjit was saying, right now we are saying, okay, hey, we have this global delivery that can deliver end to end for all of your IT needs. While you were saying that earlier, the salespeople were not gold for that. So now we've changed that whole structure there and saying, okay, you have to sell the other pieces of the business too, and get more value from the customer. The customer will get more value from us. Now he sees that, hey, we, Kellton Tech, is want to be their strategic partner versus just doing this one piece and going away. So those are the structural changes. And these may be, may not sometimes feel tangible, but we are seeing the tangibility of that by walking and doing what we were talking earlier. Now we are saying everybody is gold, everybody has to do this. And that structural change has come about. Everybody has accepted it. We are going with individual customer and saying, targeting them and saying, okay, this is a customer that we're targeting, and we're doing full board press, what we call the account-based mining kind of stuff, and saying, all the different, pieces of the company come into play and going and trying to get more business from that customer. Sorry, it's a long winding answer because it's qualitative, right? You just can't give you a one-liner answer there.
No, it was very helpful, sir. It was very helpful, and thanks for that. It really threw a lot of clarity around it. Just a quick comment, actually, in addition to what you just said, perhaps, and you may already be taking care of it, but you may also be thinking around a lot of training and orientation of your team around the One Kellton approach, because ultimately it's a cultural change, and hopefully you're already taking care of it within your organization. But
absolutely.
With that.
Yeah. You're right. So that's why it took us probably 6 months to implement this. While we tried to start working from 1 quarter prior only, but we said, okay, January 1 is the cutoff date. Everybody's falling in line. Everybody's going through that, and that training, the socializing with the teams, the buy-in from the teams, all that has been done. And from January 1, it's like we are working towards it. We are working on that One Kellton structure.
Sure, sir. Also, one last question around attrition. So you mentioned a good number around hiring. I think you mentioned 500 heads target for this year. But any colors on the attrition rate that you have been seeing in the organization?
Yeah, I mean, just like everybody else, we have been affected by the Great Resignation, right? Yes, we are in line with what the industry is. I don't want to say that, and give you a rosy picture and say, they're much better. But with that said, right, we have a little bit of golden handcuffs that we started giving to our employees with employee stock options, restructuring their pay scales. And all that has happened. That also has reflected in the margin pressure, if you call it, because we had to increase the pay scales in line with what people are getting in the industry. So existing employees have started getting appraisals, and they have got huge raises in many cases. And that has been done. So I'm going to say that we're going to do better than before, absolutely. But is it going to be the new normal? We expect that because we are part of this NASCOM and all this stuff, it's going to take probably 1 quarter maybe before everything gets stabilized, or maybe worst case 2 quarters. So everybody is now on the same level as I'm talking when I mean everybody, starting from the industry-wise. We're all going to be in one I guess, happy medium, happy equilibrium we're all going to get to, and and the resignations would reduce. With that said, right, the obvious question is, what does this mean to the bill rate? So we have been talking to our customers and telling them that, hey, we cannot sustain this. And many of our customers have realized that, and they said, yeah, they're working with us to increase the bill rate. And there are going to be staggerers or laggards, if you want to call it. There'll be some people that are going to come a little bit later, but many of our customers have accepted the increase in bill rate, and we'll start seeing better margins because of that again.
Okay. Yeah. Thanks a lot, sir, for your detailed replies, and wish you all the best for the future. Yeah. Thank you.
Thank you.
That's all from my side.
Thank you. We would request participants to limit your question to 2 at a time. The next question is from the line of Rishabh, an individual investor. Please go ahead.
Hello, am I audible?
Yes, Rishabh, go ahead.
Yeah, good evening, sir. So my question is, out of the total clients you have, can you give the bifurcation how many are in 0.5 to 1 million range, 1 million plus and 3 million plus?
I don't have it, Rishabh, top of our head. We'll have to get back to you on that number. But I will say this, the top 5% of our customers give us about 15% of our revenue, and the top 10% of our customers give us about 26% of our revenue. So that we will look at that, and we'll do that as a part of better reporting, if you want to call it. We call it better reporting, more reporting. We will do that going forward. That requires some changes within the way we report internally, and we are working towards that. Give us probably a quarter, maybe 2 quarters, to be able to come up with this kind of reporting also.
Okay, fair enough. And sir, one question on PAT margins. Right now it's 8.1, and you said you are looking at lower teens after a couple of quarters. So going forward after a couple of quarters, what is the target for PAT margins?
See, I don't want to go beyond
the industry average is somewhere around 18%, I guess.
So Rishabh, just like I said, right, I don't want to go beyond 2 quarters today because we have just implemented the One Kellton. So give us a couple of quarters to figure out how this is working, what is not working. Yes, we will have to make changes along the way, dynamic changes along the way. But our target is, like I said, right, we want to get into the high teens for the next 2 quarters when it comes to EBITDA. And when it comes to PAT, we want to get to that 10-11% range is what I would give you for the next 2 quarters. Beyond that, we will revisit this probably next quarter, and I'll be able to give you a better answer by then because we just implemented, and we want to wait and watch on that.
Okay, fair enough. That's all from my side. All the best for your future.
Thank you, Rishabh.
Thank you.
Thank you. The next question is from the line of Varun Kumar, an individual investor. Please go ahead.
Hi, everyone. So, congratulations on the number. And recently, I came across an article in Times of India. So it was about Hyderabad Metropolitan Water Supply and Sewerage Board. So congratulations on the project win. So according to my understanding, it's more over AI and IoT based project, data analytics. So could you throw what is the size of the project, what will be the delivery timelines, like how long is the contract signed for, some details, if you know?
Okay. Yeah, sure. Thank you, Varun, for the question. Yeah, that's an exciting project for us. Here's why I say that. There's a lot of money being spent by Government of India when it comes to the Jal Jeevan Mission. So this is the first win or first foray into that space for us. We have been working with some of the governments in the northeast, the southern part of India, the northern part of India, trying to get more and more focused RFPs on these are going to be coming out. There is going to be, from what I hear, a dashboard at the national level, the state level. So we are working with the governments or entities to shape those projects. because this is a new thing for them. They know what is required, what is not required. Using our expertise, they're working with the different state agencies and the central agencies to come up with the requirements, and we will be actively participating in many of these bids. With the expertise that we have in the IoT space, with the expertise that we have in the AI space, we would be able to confidently say that, hey, at least some part of that revenue is going to come to us. We are in varying stages when it comes to the different entities out there. Now, answering specifically to your question about what is the size of the thing, there are phase 1, phase 2, phase 3 part of this project. So I don't want to tell you what exactly the number is today, because it might vary. The expectation is it's going to be probably in the low double digits for today. I'm talking in crores of revenue. But we believe that the growth on that side, this is an investment for us to get into the space, and we expect that it's probably going to be significantly larger once we start winning different from other entities. Talking about the delivery timeline, there are milestone-based deliverables. We have a 6-month deliverable. We have a 1-year deliverable in this specific project. But we should be able to wrap up this project within a year, is what our internal estimate says. But beyond that, like I said, there are multiple phases for this. So we will start with phase 2, phase 3, and phase 4, where it now becomes integration into the larger IT infrastructure. That's it, Warren. Thank you.
Thank you. The next question is from the line of Sohan Joshi, an individual investor. Please go ahead.
Good evening, sir. I just want to ask, in the previous quarter, we added 20 clients, right? Hello, am I audible?
Yeah. Yeah, sorry. Go ahead.
Yeah. For the previous quarter, we added 20 clients, and this quarter we have added 6. So how much of the revenue of those from those 20 clients have been reflected in the current additional sales revenue of 10 crores, and how much is going to be in the successive quarters? How much? What is going to be spread of these additional new clients into the revenue?
See, when we start off a project, right, the first quarter of the project, after the project, is when we really begin the project. And typically, we say, 10% of the booked revenue is what it's going to be in that. And over the next quarters is when you start seeing significant revenue. I don't have the numbers, when it comes to exact breakup of how much is came from these new customers, but we don't track it that way. That's the reason why. But, as a thumb rule, 10% comes in the first quarter after we sign a contract, and the rest of the probably the next of 80% comes in over the next 1 year, and then the balance to 10% comes after that. So the new customers that we signed last quarter, I don't believe there are any revenue has not come in yet, but I'm talking about the previous quarter's revenue. Previous quarter customers of the 20 customers that you asked the question about. So I would say 10% came from that. The rest of the stuff will come in this quarter and going forward.
So this humble client was been included in previous quarters, 20 new additional client, right? And from which certain, or maybe a previous to that, from which the revenue has been now reflected in the current 10 crores value addition, right?
Right. Yeah, you're right. Yeah.
Okay. That's my
second ongoing project, right? See, what happens is that when we launch, right? I'll just use the example of a car just to give you a perspective, right? When we launched Humble last quarter, right? It's just the phase 1 that gets delivered. What I typically explain to people is, I use the car concept where hey, the first quarter you're going to get is probably a Maruti. You're able to go from one place to another using the Maruti. But whereas if you want to get the Benz cars of the world, it's going to take a few quarters to get us to the Benz cars of the world, where you have all the bells and whistles, and you're now able to cruise, all that stuff, right? So that kind of stuff is what happens. Yeah, go ahead. You were asking some other question. I interrupted you when you were asking.
I also read an article about we are targeting around $320 million revenue, for which we are going to hire aggressively. And I've been seeing on Twitter you are hiring from various colleges from West Bengal and Telangana and all. So, sir, I mean, what will be the revenue guidance for the next year? Are we going to cross 1,000 CR of the what is targeted of the $320 million? That's roughly around 2,000 crores is the target, right? So, are we going to cross 1,000 CR by the next year? And then following, because of this aggressive, we could see much more higher growth for the successive years.
So, like I was answering a previous callers, I am not going to speculate at this time what would be the revenue after 2 quarters. But I would say the immediate goal for us over the next 3 years is to get to $200 million. So that is the goal that we have set internally. And that is what we are restructuring our company to be able to get to that. So for the next 3-year target, we said about 200 million is what we are going after. And if we achieve that, and before that, that'll be great. It's what we are working towards. But our goal, right, on a conservative estimate is 200 million in 3 years is what we want to get to.
Okay, that's a lot. Of course, we're going to achieve that. Sir, one more thing, there has been again a slight decrease in the promoters holding even in this quarter. I mean, whenever there is a promoters holding statement out after a quarter ended, it doesn't go well with the stock prices. So, I mean, what is going to be a strategy in the future? Are we going to decrease again some of our holdings, or is it going to remain intact at least for a couple of few quarters?
We have not sold anything last quarter. I think anytime we sell something, we have to declare to the exchange, and we have been doing that. I don't know what the decrease is. Probably it's because of employee stocks, ESOP that got exercised, or that's the reason why there may be a slight percentage decrease, but the quantum is the same. We have not sold anything last quarter.
Okay. And sir, one more thing, sir. Are we going to pitch anything for a stake to any FII for going ahead, sir? If we go ahead aggressively for the one Kellton, and are we after a couple of years, are we going to pitch for a good FII to buy a stake in a company?
I mean, right now, are we actively pitching? No, absolutely. We are not doing any road shows at this time. But we are talking to people. When people are interested, they call us. We are absolutely talking to them. So don't have any timelines as to when somebody is going to invest in a company. We have stopped, I guess, road shows. Probably I would say about 4 or 5 years ago is when we did the last road show. But if somebody is interested in us, we have been actively speaking to, and we will continue to speak to. But there is no specific strategy today, I would say, that we are going after. But I would say that with that said, right, there are some people that are buying who are interested in our shares, and we are seeing that in the shareholding patterns that we get. But we do want to look at if somebody wants to invest, and we will be able to get our target of 200 million much faster, and we can go with a new target based on investment. But at this time, right, we are not actively on a roadshow. But if somebody is interested in investing in the company, absolutely, we'll love to talk to them, because no entrepreneur will say no to money.
Yeah, of course. Of course, sir. So one last question, sir. For this European business, so after this quarter, say from the April onwards, we are going to see some growth even much more faster than we anticipated, because last quarter got affected due to Omicron. But at least we can see some growth in European business from April, right?
That's correct. That is the plan. Yes, you're right. Absolutely.
Okay.
The focus area.
Okay, so let me not get into the figures, at least, because we can't anticipate as of now. But thanks. This was quite good help to us. Thanks a lot, sir.
Thank you so much.
Thank you. The next question is from the line of Amit Mishra, an individual investor. Please go ahead.
Hello, everyone. Thanks for giving me an opportunity to ask questions.
Sorry to interrupt, Mr. Mishra. May I request you to come on the handset mode, sir? You're not very clear.
Okay. Hello, can you hear me now?
Yes, this is better. Please go ahead.
Yeah. Okay. Hi, everyone. Congrats on the decent set of numbers. My first question is, I'm very new to the company and still reviewing our business and future prospects. So in this context, I was thinking it would be apt to hear the management itself, regarding your long-term vision for the company. And also, I understand the current line, broadly I understand the current line of business, what we are pursuing, which is standard consulting and services work. But do we have any plans to develop high margin, strong core products going forward? Or do we have, aim to work on technologies that are unique and could result in patents and TMs? So the thrust of my question is on margins basically, but because historically we have been in mid-teens at best, at typical, service provider margins. So if you can elaborate on long-term vision and how and what are the plans basically? Yeah.
Okay. So Amit, to answer your question on the long-term vision, I'll just start from purely the premise of starting this company. When we started this company, we started with a slogan where we call infinite possibilities with technology. When we started in the new age kind of technology, and today also we have the same strategy where we offer cutting-edge solutions using newer technologies. With that said, right, there is always going to be customers that we service, which may not be the new age technology, because enterprises typically what it takes is it takes a little bit of time before they start adopting new age technologies. I guess that line has blurred between startups and enterprises nowadays, where even enterprises are investing in the Web 3.0 that we talked earlier about the NFTs. So there's a lot of exciting stuff going on, and we are ahead of the curve when it comes to many of our peers in these kinds of regards. Yeah, we want to stay ahead of the curve, and that has been our strategy, and it has worked successfully for us. We'll continue to be ahead of the curve, but the margins, because like I talked about earlier, right? The structural limitation was there. That was structural limitation. Now we have removed. The margins should improve, and it should improve over the next 2 quarters. Is when it will start showing with what we have planned so far. Now, answering your question about the product side, we are not a product company. We are a services company. We do have 1 or 2 products that we use more to sell it as a platform, as a service. When it comes to when I mean platform, right? I'm talking about using the platform to provide solutions to our customers much faster than what it takes to implement something from scratch. So that is what we do, but we don't do product selling today. We have 1 product that we have in the oil and gas industry that we have delivered successfully to a few customers. Has not taken traction to the extent that we want to take that traction to. But because as you are aware, product takes a lot of marketing dollars, a lot of time before adoption happens. But once you start selling that, a few licenses, then everything else goes straight to the bottom line. But we are not a product company, and we don't want to be.
Okay. No, it's okay. It's clear. So we just focus on our core areas and get strong in there. There's no problem with that. Second question, it's more on promoters' stake. I've noticed on the screener that last 8 quarters the stake got reduced by 10%. So I just want to hear you out, like how it was done. Was it open markets or some investor took it off from you? And there is also outstanding pledge there around 12-13%. So why was it created? And to just get some historical on it, because I didn't research enough. And why? When can we expect it to be released? If you can elaborate there.
Okay. So Amit, yeah. So since you are not aware of historical, I'll be happy to answer that. So let me start with the pledge part. So Amit, we are a first-time entrepreneur.
No, I mean just to sorry if it was not clear. I saw the shareholding pattern of last 8 quarters.
Let me answer that. I'm answering that.
Yeah. Okay.
Let me answer that. Yeah. So we are a first-time entrepreneur, and our family has not been an entrepreneur before. We are not, like I said, the Tata or a Birla, where we have unlimited assets that we can pledge to a bank to get a loan. So typically in India, from your accent, I see that you may not be, you may have been sometime outside India. In India, typically what happens is when you take loans, they want collateral. So the collateral, we don't have any collateral or hard assets within the company. It's all the people and, the computers is what is the asset of the company. So we had to pledge our, being the promoters' properties to get loans. And like I was saying earlier, we are not a Tata Birla. We don't have unlimited properties to pledge. So we had to give out our shares as a pledge to the banks to get loans for the company. This is not loans taken for the promoters, but loans to the company. And, the banks, once they get some hold of some shares, they are very unhappy or reluctant to release the pledge, despite, let's say, the amount of loans that they're taken has come down dramatically or the share price has gone up. So we have been trying to extract the shares out of the bank, but they're not been releasing it. We are working with them. Right? So this takes a long time to get them released. But I want to assure everybody that, these loans were taken for the company and the pledge was for the company's loans and not for individual loans. Okay? So that is one part of the question now.
Okay. Yeah. Okay. And on the 10%
you asked about, the sale of shares, right? See, this, as I stated earlier on this, COVID has, I guess, opened many people's eyes as to, the liquidity needs, both from an individual level as from a company level. So, the same thing has reevaluated within the family. And my dad is 80 years old. He's the majority shareholder. He felt that, hey, we need to retire some of the debt that we have on our personal books. So that's the reason why the share sale has happened, to get more liquidity and also to reduce the family debt that was there. Would that continue on? I don't believe so. But, like I said, my dad is 80 years old. So he might come and at some point say, okay, let's relook at this. But at this time, I don't have any plans to sell the shares.
Okay, that's fair. Yeah. Okay, understand. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Meet Gada, a retail investor. Please go ahead.
Hi, sir. Happy to get back again. I just saw one interesting paragraph from the statement. It is regarding the live QR code technology scanning, which is going to come up with. I just wanted to ask you, the real-time embedded analytics, is this technology into existence by any of the companies, or is this the industry first?
Yeah, I mean, there are a lot of, I guess, like I was saying earlier, we are doing a lot of cutting edge stuff. There are a few things that, I don't want to reveal customer names, but I can talk about a few things where we do exciting projects that nobody has done before. I guess if you have a Star Trek analogy of bold to go where no one has gone before. So those are some of the projects that we do. We are working for one of, I guess, a global multinational where we're doing sentiment analysis using purely what is going out there, using AI, ML kind of technologies to see what is the different things that are going in social media, if what is being sent out by individual employees, is it in line with their standard template, or is it something different? Is the color scheme going the right way or the wrong way? Is there a bleeding of colors? So this is exciting space that we keep working in, and then including the NFT space, right? There's NFT, a lot of buzz is going on in the NFT space, where people just talk about, hey, we have done Humble only. Humble is just one project, but the way we have built the solutions for that, now we can list it across platforms. It doesn't have to be on one marketplace to sell your digital asset. It is on any platform using the standard. If they start using, there are certain standards that industry follows. If you have that standard built into the digital asset, you can sell on any platform. It doesn't have to be one platform. So how do you do the cross listing? So there's a lot of things that we do that nobody has done before. While probably we are not marketing ourselves the way we are supposed to, But there's a lot of exciting projects. If I talk to individual employees, you can see that the stars in their eyes when I say, okay, what are you doing? And it goes off, and for them it's no brainer. Hey, I said, hey, I'm doing this, and when you start thinking back, right, and that is cutting edge stuff. Being augmented reality that we're working in this NFT space, the Web 3.0. There's just now people are talking about Web 3.0, but we've been working on those projects for a while. So those are the exciting stuff that we do. And for that is, for us, hey, if we've done it, it's nothing. It's just a standard thing.
Right. Because I come with an IT background, and if I'm not wrong, I tried Googling after reading this statement, and I couldn't come across any company which is providing this so far. So I think this should have been one of the, the highlights of the presentation, but I think it's hidden somewhere in the detail, which is not fair, I guess.
Understood, but we will try to bring it up. At this time, we are more on execution mode than in a marketing mode when it comes to. Probably we should do a better task at that, and we will definitely start doing a better job of this marketing. Thank you for pointing that out.
Sure, sir. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Niranjan Chintam for closing comments.
Thank you, Margaret, and thank you everyone for participating in the earnings call. Really appreciate and looking forward to talking to you. And like I said in every call, we would be happy to talk to you one-on-one. If you are any time in Gurgaon or Hyderabad, please do look us up. Please reach out to Anupam, and Anupam would be happy to set up a meeting to come and interact with our employees, where we get to hear firsthand from our employees itself, instead of management doing any filtering on what our exciting stuff is going on. So thank you again, and looking forward to talking to you in the next quarter earnings call, if not before.
Thank you. On behalf of Kellton Tech Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.